Good morning. You're watching the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Good morning, Navneet. I'm Agam Vakil. Top headlines. It's a choppy day on the last street as Indian markets brace for expiry. Nifty trades around 11,100. India VIX continues to surge. Open interest in Kerala Healthcare and Bata surges after traders take fresh positions in their respective futures. United Spirits registers its sharpest fall intraday in 6 months after the Spirits maker misses estimates in its third quarter earnings. And Idea Cellular and Indigo Airlines are two big earnings for today.
All right, let's take a look as to what's happening with the markets. Remember that this is the expiry week, and so far this week has turned out to be really good for markets. But what you're seeing today is a bit of volatility. In fact, the India VIX once again has surged nearly 3.5%, and Nifty right now is trading in the red. The January futures trade at a discount of almost 5 points. 11,073 is the mark where Nifty is trading. Well, the Bank Nifty too seems to have come under pressure in today's session. Bank Nifty is down almost 114 points, but the January futures are holding up to the premium of almost 3 points. Let's tell you which are the most active strikes among the Nifty today. So you've got strikes like 11,000 put and the 11,100 call strike, which are the most active and which are actively traded in today's session. We've seen a bit of call writing coming back. In fact, you've seen call writing for levels like 11,100 and also 11,150 in today's session has seen a bit of OI addition on the call side, whereas on the put side we've seen an addition for 11,000 as well as the 11,050 strike. So it remains to be seen where the expiry can take place, but from the current levels, I think 150 points higher or 150 points lower is the range that the traders will also be working out with respect to that. But I just want to pull up the rollover plates, which so far have been in line, at least the Nifty rollover. Let's see what's that indicating currently. Even the Bank Nifty rollovers currently stand at about 32.5%, and as you can see, the February series have seen addition of almost 6% so far. The Bank Nifty rollover plate will too come up on your screen. Remember, Bank Nifty is doing pretty well. The rollover there is almost 35%. But there is an important development. There is a circular by SEBI which states, Agam, that the margin limits for the stock futures will go higher after the February series contracts expire. Could you take us through what exactly that means?
Absolutely. So, Navneet, it comes down to utilization of those market-wide position limits. And according to that SEBI circular, from the March futures onwards, every time you see the utilization of the market-wide limit of a certain stock move above 70%, your exposure margins will increase by that much more. So anything between 70 to 75%, your exposure to margins will increase by 50%. And moving on from 75 to 80%, it will move to around 100%, 80 to 85%, 150, 85 to 90 at 200, and this is around the time when certain stocks will also come into the F&O band that is over the limit of 85 to 90%. And again, it's the same for around 90 to 95%, with well over 300% increase in your margins. Now, the reason why they're bringing this in is to make sure and aid a lot of these traders against the volatility, especially that comes with unwinding of positions, in the derivative segment. Of course, Navneet and I were talking about some very interesting facts, and one of them was that by the second week of an expiry, nearly 40 to 50 of the 200 odd stocks in the futures and options space already have a market-wide utilization of an MWPL of around as much as 70%. So a lot of these stocks already qualify for a lot higher margin by the second week within an expiry. But Navneet, there are some more data points that you're bringing in.
That's right, Agam. In fact, as we speak, there are almost 37 to 38 stocks which have already surpassed that limit of 70%. And what Agam was saying, the margins will be increased. And I guess if you go by the limits which SEBI has given, they're increasing the margins by as much as 3 times. Obviously, that will be dependent on where the current utilization of MWPL. But look at that. That's the list of the most active stock futures. The percentage of total open interest tell you that this is the total percentage of overall open interest. That's 98% for Century Textiles, which is held by 17 clients. And the open interest as a percentage of MWPL, which tells you the utilization of MWPL, PL for Century Textiles, let's say, is about 75%. So these are the stocks actually where you could see unwinding of open interest coming about. So Century Textiles, Dewan Housing, Fortis, PC Jewelers, GSFC, and these are the stocks which are actually traders' favorite as well. You usually see stocks like Raymond, India Cement, BEL. Raymond and India Cement usually feature in the ban list every series, so to say. Chola Mandalam and IRB are a couple of the stocks, but as we speak, there are almost 37 stocks, and you will see Reliance Communication, Reliance Capital. Most of these stocks will feature. JP Associates too will be featuring in a list like this. But what does this exactly mean? I guess, Agam, they've already given you 1 month's time, right. So I don't think there will be any sort of panic there. We've not seen that reaction coming in today's trade as well, and 1 month is a good time to unwind. But what impact will be, they want to curb more of retail participation in the futures and options space. And I was just looking at the data, the client overall concentration, if you see, of the futures and options position, 50% of that is held by client and only 25% is with the FIs.
Right. And historically, and I speak anecdotally too, but historically what we've also seen is whenever we see markets surge quite considerably, SEBI usually brings in these actions, to make sure that a lot of these retail traders don't lose out substantially.
You know, in a bull market, you can come out with things like this because market will absorb such reactions, but you cannot come out with such circulars, I guess, in a bear market, because that gives you a very negative reaction. That's the reason we've not seen any major reaction coming up.
Right. Well, in any case, let's address, move on and address some of those active stock futures in today's day of trade. And with respect to a decline or an increase in open interest, well, one stock that stands out is Bharti Airtel. But I'm going to come to Bharti in just a bit. Let me just first address the list of stocks which are looking at a substantial surge in open interest in January futures. We're just 2 sessions away, in fact, 1.5 sessions away from expiry. And Just Dial, along with NIT Tech, is still looking at a substantial increase in open interest in the January future. So something's going to come about there because we're looking at an increase. Oracle Financial Services, Infosys, and Mindtree. Well, all 5 of them belonging to the technology space. So, well, certainly something is happening there. In terms of a lot of these stocks which are looking at unwinding too, we have Allahabad Bank, IDBI Bank, Bank of India, Reliance Communication, and Siemens. But this is expected to be normal because we are in the expiry week, which is why we will possibly see some more accumulation in the subsequent series, that is the February and the March series. That said, well, all eyes will remain on the technology sector, considering that's the only area which is gaining substantially.
And your sector rules today, Agam.
Right, absolutely.
Okay,
yes.
Before we get our guest on the show, here's a reminder. If you have any queries in the futures and options market, do call us on 022-4540-4141. You can also write to us on our social media platforms, Twitter, Facebook, with AskPQ hashtag. Well, let's welcome our F&O experts for the day. Rahul Shah of Motilal Oswal Securities and Vishwesh Chauhan of Monarch Network Capital are joining us here. Well, good afternoon, good morning, pardon me, good morning to both of you, and thanks a lot for joining us today on Bloomberg Quinn. Vishwesh, let me come to you first. This is the expiry week, and it's been a great series. We've seen higher levels almost every day. Tell us what's the range that you're working out where the January series could expire tomorrow?
Yeah, I think somewhere the kind of writing we are seeing in the 11,000 put option gives me the feeling that probably you are not likely to see an expiry below 11,000. On the other hand, I think since 1 day to go and the kind of NCVR and the kind of news coming in, I think the upside may remain curtailed till 11,200. So yesterday the most important thing was the kind of OI which we added in 11,000 put options. So I think 11,000, 11,200 is the 200 point range, and probably you can have a expiry of 11,100 around 130, 40 points.
Rahul, good morning to you as well. The India VIX is rising. We've seen a rise in the Nifty put-call ratio, which is also at historical levels. A lot of the other technical indicators are also indicating that the benchmarks are overbought. What is your reading of these underlying variables, and how would you play the benchmarks then?
I think we've seen that. I think obviously IBs are inching up higher, and obviously next week we have a budget week, so obviously we'll see some kind of volatility, and usually in any event base we always see that IBs going higher and higher, and obviously we are at all-time high, and so people might be looking at hedging their positions, and also we've seen some volatility index moving up higher. Secondly, most importantly, if we look at the indices, the large cap stocks or heavyweights in the Nifty and the Bank Nifty are showing still a very good strength, and technically also I don't think so near term those stocks will break. So in future perspective also, if you look at it, so it looks very attractive. So I think the Nifty is not going to fall near term, and it's going to go inch up higher only. And the best way to play this at the Nifty at all-time high levels or volatility, whatever you look at, is to buying options and indices.
Okay, that's the view coming in on the indices, but what sort of option strategies to deploy today? Let's switch our focus to the options corner. Vishwesh, what are you advocating when it comes to the options today?
Yeah, I think the one thing you have to understand is that the volatility has risen a lot. And if you have not been buying volatility in last week, probably at this level, around 17 weeks or individual volatility for the current month is around 20. I think it's not a good idea to buy an option now, at least, right? You're going into an event and probably, let's say, if you want to do something from a tomorrow's perspective, then probably what you have to do, you have to create a spread. So what spread would do is spread would reduce your cost. So what I would suggest on a simpler note is, PNB looks good to me. I think yesterday was a breakout. So what somebody could do is probably create a spread of 180, 190, 1:2, probably 3 ratio. So buy one lot of 180 call option in the PNB around a 5 rupees 60 paisa, and sell a 3 lot of 190 call option roughly about 1 rupee 25 paisa. Your net outgo would be roughly about 1.65. So right now PNB is running around 184. So it is likely to be in the money. And if it happens to be around a 190, which my guess is, then probably you'll make some money out there. So naked option buying is not what I would recommend at this stage.
Okay, well, that's the view on PNB from Vishwesh. Rahul, how about you? You have a strategy on the benchmarks?
Benchmark, as I said, I think I would still go long on both the indices. So I think first coming to Nifty. So I think as I said also that the heavyweights looks good. So I think the best way to play is going long on the options on Nifty. So I think 11,200 Nifty call, which is around 145, 146 level, I would go long with a stop loss of 128 and target of 175. And secondly, we saw BankX doing quite well in last few sessions, 4 to 5 sessions, and still looks interestingly, I think, all-round participants by all the heavyweights in the BankX. So I feel that BankX, unless it breaks 26,900 again, I don't think so. We'll see some kind of unwinding happening on a futures perspective. So the best way again to play at the higher levels in the indices is through options. And obviously we have a volatile week next week because of the budget event. So I would buy 27,500 call, which is of the first Feb expiry date at 275 or 276 level. Keep a stop loss of 250 and target of 350.
Okay, so those are a couple of the option strategies being advised by our experts, but let's switch focus and address viewer queries. The first one comes on Facebook from Monish Bhatia. He's purchased Reliance 980 call strike at a premium of 4, and he's saying he's purchased it today. He wants to know what should he do. Should he hold on till tomorrow? And he has another query on LIC Housing Finance 560 call strike, which he's purchased at 5.4. Let me first take Reliance query first. Vishwesh, what would you advise him? He's bought the 980 call strike at a premium of 4 rupees today. Do you think he should wait till tomorrow? I guess the current premium is somewhere about 5.
I think current premium is around 5 rupees 90, and the underlying is about 970. So tomorrow is an expiry, and he's trying to speculate that whether it will move 10 rupees or not. In my opinion, that is a riskier bet. So what probably he can do is, in my opinion, in this series, Reliance may not go below 940. So in order to, protect his, we don't know whether he has a, sort of a margin what it requires to be. So I think on a simpler note, what I could say is that 5 rupees 980 call option in Reliance looks very expensive to me right now. So probably if I was him, I would probably exit at a, minor profit or a loss, and probably I would venture out in something else.
Okay.
Navneet, if I may interrupt here,
Sure.
Another one of our viewers on Facebook, Ashish Yadav, also has a question on Reliance, which is why I'm going to bring this one here before we address Monish's LIC housing, query. Ashish Yadav on Facebook says that he has bought the 940 and 1000 call spread at 11, and he asks if he should book today or wait till tomorrow. Vishwesh, since you were already on the issue, why don't you also answer Ashish's question? He has bought the call spread of 940 and 1000 at 11.
I think that's when he was buying at 11, probably he would have bought when it was in the money. So right now, if you see the spread, 940 somewhere around 1 rupee 40 paisa, and 10,000 is about roughly 2 rupees. So he has bought. So probably he's at the loss over here because 940 has not gone high. So my sense is that his break even is turning out to be 951, and right now it is. My guess is that he should hold on to the position, and Reliance is likely to expire roughly about 970, looking at this moment and not guess what will happen tomorrow. So I think he's at a very decent profit. So 940, 30 rupees, and 1,000, which is likely to expire over here. So he'll make about 2 rupees over there also. So if he want to protect his profit, what he could probably do is square off his 940 call option, right, and keep holding that 1,000 rupees short option. So my advice, either hold on to the spread or square off the one leg, which is 940 call option.
Okay, that's the advice from Vishwesh on Reliance. Ashish, he's advising if you can square off the 940 and hold on to the 1,000 strike. But I think Monish Bhatia had a query on LIC Housing Finance and the 560 call strike, which he purchased at about 5.45. Let's just check what's the current price of that. I guess he's pretty much in the money. The 560 call strike of LIC Housing currently trades around the mark of 9.7. Rahul, I'll take this query to you. Will it be wise to book profits today, or he should hold on till tomorrow?
I think it would be wise to book profit on LIC Housing if we see the stock has been laggard for quite some time, and if we see more volatility in the stock or in the indices, this might go further slide down. So I would advise him to book profit in LIC Housing, call what he's holding.
Okay, so that's the view on LIC Housing Finance. I'm gonna go across and take our expert strategies on what they may have to recommend to our viewers. So Rahul, I'll come back to you. You have a long on SBI futures and a long on Tech Mahindra. Can you take us through those, please?
I think PSU banks, I think in yesterday's session, we saw fresh additions, longs building up the entire space. So if you look at SBI, BOB, PNB, or Indian Bank, Canara Banks, all the list goes on and on. So I think in that space, I still believe that SBI tops the chart for me in terms of the risk to reward ratio. So I think I would go long on SBI with a stop loss of 316 and target of 340. Second being a Tech Mahindra. We've seen the very good rally in the tech stocks in last two series. So I think this might continue. We have seen first mid caps outperforming the large caps and then large caps participating in the tech play. So I think the large cap IT stocks will still continue to do well and looks interestingly in that space. So if we look at Infi, if we look at HCL Tech, if you look at Tech Mahindra, or to compare to some lot of mid-cap IT stocks. So in that space, my bet is that TechM has given a fresh breakout and stock is near to a 52-week high, and technically also has given a good breakout. So I would go long on Tech Mahindra with a stop loss of 577 and target of 615.
Okay, let's also get you some trading strategies going from Vishwesh. What are you recommending when it comes to stock futures?
See, I'm very much agitated today morning. The way markets are open, and I'm not liking the setup. And I think the volatility is right now around 17, and probably in my case, you are heading for a budget and you are getting a news from regulators about the margin. This is certainly not a very good idea. Though I was bullish until now, I'm not implying that I am bearish, but I would not want to venture out into buying something which would have a straight payoff in terms of going down. So what I would like to probably do is probably try to create some sort of a neutral strategy when it comes to the market. So PNB I mentioned, somebody can do a 180, 190 spread. The another thing which I'm able to read, data and probably seeing a good indication is Dr. Reddy. So one can do a spread over here, buy a Dr. Reddy call option of a 2,500 strike. My guess is that it has been a breakout, and I think the 2,500 call writers have not yet covered the position. So probably till tomorrow, we may see some sort of a build-up over here. So Dr. Reddy, 2,500 call option, which is roughly about 70 odd rupees, so that can be bought. And in contrast to reduce your cost, one can do is like you can sell a 2,700 call option in the ratio of 3. So that is the couple of strategies which I could recommend.
Okay. Those are a couple of the trading strategies being recommended from our experts. Rahul, I wanted to come to you and take your views on the SEBI circular, which has come stating that the margin limit will be increased in case the total open interest increases the 70% mark of the market-wide position limit for individual stock futures. Though they've given 1 month's time, I think the circular becomes applicable post the February series expires. What are your thoughts on it? Will it curb the retail trading into the futures and options market?
If you look at, interestingly, SEBI is taking steps to curb retail guys. So they increase the lot size to 5 lakhs, and then a thought process is to increase the value size going higher also. So my sense is they want to discourage retail investors to getting into derivatives trading. So from quite some time they have been working on it. So I don't think so that's going to matter too much for these things. So if somebody wants to participate or go to the best way to take a delivery. So I don't think so that's going to matter much in the markets in the future, and in particular few stocks where the concentration is high.
Okay, so moving on, I do want to address a few stocks which are buzzing in trade in today's day of trade, and one of them is Bharti Airtel. Now, the stock is under some amount of pressure right now, and we are looking at January futures looking at increase in open interest. I'm sure February futures will also be looking at substantial increase in OI. This means that there are shorts being taken considering the underlying now is down by as much as 5.5%. Vishwesh, any view on Bharti Airtel as of now, or would you advise anyone to avoid any trade right now, or would you initiate a short even right now?
So I think the perspective matter here. If somebody is looking for immediate short term, I think the dip of 440 can not be ruled out, and in my opinion, that is very much going to be on the card. But if somebody is looking for a 6 month sort of a move, then in my opinion, around 440 is probably what I would like to do. Is I would like to buy for a 600 rupees target. So I think those two are very contrast view, and that is a function of the individual's risk appetite and a time frame. So purely if the show happened to be on the future side, then if I think it has violated a very important support of 478, in my opinion, probably it is heading for a 440.
Okay, that's the view on Bharti Airtel. The counter is under pressure. I'm just going to take one more viewer query. Maheshwaran Damodaran writes to us on Facebook. He's holding TCS February 2900 put strike, which he's bought at a price of 30, and he wants to know if he should hold or sell. Let me just check what the current premium on the 2900 February put strike is. Already 19 rupees. So he's losing money here, Rahul, and clearly IT is becoming the flavor now. We've seen the IT index doing well, and even the large caps like TCS have started performing. The current premium is actually 2021. He's entered at 30. What would you advise him?
I think you should exit and book a loss in this strategy, because as we discussed earlier also, my view is that the tech stocks looks very interesting, and they're showing a good sign as well. And so in fact, the large caps are leading the rally right now. So be it TCS, Infosys, TechM, so all looks good on that front. So my sense is exit TCS put options, what he's bought for February series.
All right, that's the view on TCS. Well, TCS, of course, has made some really sharp moves in the recent times. But, with that, we're at the end of this show. So I'd like to thank both our experts, Rahul as well as Vishwesh, for joining us and taking us through their views, as well as helping us, some of our viewers, with their queries too. But it's a wrap on this edition of the F&O Show. We have lots more lined up with respect to earnings, so don't go anywhere. Keep watching Bloomberg Quick.